The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a beautiful November 29th here at the headquarters of Technical Trading and Investing, TFNN.com. Lovely day. Once again, another day where we had to turn the air conditioning off in the studio. You know, if you're up there north, I just like to tease you a little bit when it's just a nice day out. And it's the end of November. I remember, you know, it's nice to see the leaves change color and then race back down here where it's nice and warm and toasty. Air conditioning is always preferable to heat. I can always find some shade. It's a little harder to find a fire when it's all cold. Back in history, Andrew McCarthy turns 50 today. For you Purdy and Pink fans. Of course, we ended up with John Cryer, so there's always a little cast-off to everything. Chuck Mangione. We were talking about him in the studio not too long ago. He turned 72. A one-hit wonder, but he got his one in for the flugelhorn. And I guess will always be remembered for that. And if you love King of the Hill, all the stuff that they sell in the Megalomart, which I think is supposed to be a Walmart, a faux Walmart anyway. Always loved that show, King of the Hill. But I guess it's no longer on. Anyway, I've got a few people turning. Probably the things I'm most interested right now, other than what everybody else is talking about, is Sirius shut down their internet. All lines in and out. Normally it's one of two things. Either it's the end and you're sneaking out the door, or they're deciding to gas their own people. One would be good, the other would not be good. But we've got a lot of spark and tinder still going on in the Mideast, believe it or not. I'm shocked. There's gambling in Casablanca. Anyway, in Egypt, we've got a fairly decent potential tomorrow when the Muslim Brotherhoods, read them as the Nazi wannabes, are coming in and having their march after several, I think 4 or 5 days of the more freedom-loving Egyptians out there have taken to the street trying to force out these Nazi wannabe Muslim Brotherhood bunch that are running the show now. And the question is whether or not tomorrow will be the start of a civil war in Egypt. So we've got some things going on, a little bigger than the fiscal cliff out here, but we will keep an eye on it. And let's see what else we have going on. Syria. Oh, breakfast at Tiffany's. Well, it's probably going to get some gruels. Tiffany got smacked out there. What is that? TIF? TIF. Tiffany reported its third quarter EPS of 49 cents and revenue of $853 million, which missed estimates by 14 cents and $4 million. Sales climbed 4% year-on-year, although the gross margins were pressured and fell 160 basis points to 54.4%. Still awful good. Tiffany's off about 6.5%. What are they off? $4.11. There were a lot of retailers out with weaker numbers this morning that people said they didn't see coming. Some are blaming it on the storm in the Northeast. It's a little hard to see whether or not that is true or not. We'll probably have to go through another quarter to make sure. But still having some issues out there with companies trying to figure out exactly what is going on, and what is temporary, what is not temporary. So let me see if I can get the what else was going on. Anyway, I wanted to take a quick look at the market again. I am now fully short in the newsletter. I think maybe I have, actually I have one more position that I'd like to put on. And if I get the stock close to where I want it to be, that's exactly what I'm going to do. But I'd say I'm 85% short in my portfolio right now, looking to go 100% short. I think the pretty good risk reward here. The resistance comes in very strong at 1408. Could it get up to this 1420? Well, it tried this morning. We're going to see how it's going to do the rest of the day. One thing we don't see is a lot of volume, 2.15 billion shares so far. So, this time of year we should still have fairly significant volumes. One of the other things that I dislike about this market was that we've got the head of Goldman Sachs running around telling everybody the sky is blue. Normally when you see that and you see the drumbeat of the fiscal cliff is over and everything's going to be pretty good, you should think about listening to your wife's divorce lawyer, or your spouse, I guess, if you're the wife. You should probably be, normally when you see people of the street pronouncing something rather vigorously, almost always you want to go the other way because there's nothing in them to benefit them giving you free advice. But to me, we've seen a lot of free advice the last few days about how everything's wonderful, nothing's going to happen, and it's the usual suspect. It's the head of Goldman Sachs. It's Warren Buffett saying that he wants to pay more tax, but won't pay the $3.1 billion he already owes, and is fighting it vigorously. It's do what I say, not do what I do. And I always suspect that when I see all the talking heads come out, it's time to go the opposite way. There was a great chart I saw that was over like 8 years. I think it was Mary Meeker came out and basically told everybody the S&P was going up another 200 points over like 8 years. And it was like within a week of a major downturn every single time. She only came out and told everybody the sky was rosy when they were wanting to get out. I don't think I see her that much anymore. Maybe it's Mary. Maybe it was Mary Meeker. Maybe it was. Can't even remember the gal now. But it was an excellent chart going from about 1999 to 2009 of another shill in the marketplace. And kind of watch those kind of guys out there that are probably not good for your health. And a lot of times they're a good counter signal to know that they're out here really willing to push the markets at the very end. I think that we have a market that has the possibility of going to 1440, and that is probably a 50% possibility. We also have a 50% possibility that we go back down to the low 1300s, and maybe even a 10% possibility that we see 1270 before the thing stops. Maybe even the odds of it going to 1440 are 70%. The problem is it's such a small percentage higher. Do you really want to be fighting for the last 15 or 25 points in a move with the option of knowing that the market could fail any time? You may not believe that. I do. I suspect that all the happy talk, as Mr. Reid, or the President of the Senate, says, all the happy talk is just that. There's still no discussions of actual cutting spending. We will be spending $1 trillion more than we bring in yet again next year. There's absolutely zero talk of cutting it. And even the president's saying tax now, cut later. And the House Republicans, especially Tea Party guys, there's enough of them in there that it will not go through. So I'm pretty much betting that one of two things happens. One, there is significant cuts in the budget, or that we hit the fiscal cliff. I figure that we're probably more like 90% chance of hitting the fiscal cliff. And if I'm wrong, I don't think that there's too much upside. If I'm wrong on the downside, I think that there's a very strong move to the downside. And when you look at VIX and implied volatility in the market right now, what the VIX is, what? Where's that at? Let me find it here. 15. Pretty good indication anywhere around 15, 16, especially when you get into the 12s. Options are so cheap that they're normally better than playing the underlying equity itself when it comes to risk reward. But right now, I have to say that I'm on the bearish side. The market could fail anytime. It could pop up to 1440 and I could be wrong. But I don't think that there's a whole lot more above this, especially when we see retail sales coming in weak like we saw today, when we see earnings come in weak like we have the last 60 days. And the only reason the market is going up is there's a fire hose of money from helicopter Ben Bernanke dropping money, and it's got to go somewhere. And people are actually thinking this is a better place than under the mattress. My particular feeling is if you're not short, you should have your money under the mattress or in gold or in something, although I think probably gold's going to sell off in the next round also. So we've got a lot of stuff going on in this marketplace. We'll be talking about it through the rest of the day. I did want to get into a couple of charts real quickly and see exactly where we're headed here. Let me pull up a chart here pretty quickly and look at the S&P real quick. And yeah, I mean, we've gotten a little bit higher. I wanted to take a look and see how this actually changed the ABC down that we are making, or I suspect we are making in the marketplace. Let me make my A, my B, and my C, and I will be very happy. So that takes us to 1-1 ABC now, takes us to 1288.54. If we look at the high on September 14th at 1474, 5 billion shares. Your B point comes in on November 16th, 1343.35, and you end up with your, if this today is the high, November 29th, 1429.70 is your C point. Sets up for a 1288. That'd be a nice little move out of here. I don't think it would be too much to think that if this all this grand singing Kumbaya and having a drum circle to get the fiscal cliff taken care of falls apart. One of the other reasons I'm pretty sure that this thing is a whole lot of hooey is that CNBC's running this Rise Above campaign, which is probably nothing more than a thinly veiled attempt by a political party to infiltrate the media just a bit more, if they haven't already. Of course, one network is already, that company's already pretty much dedicated to it. But we shall see. I don't think we'd have that much higher. Even if they came out with an announcement tomorrow, I think we'd still be fine on our shorts. We'll be back in just a minute. You can give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we're going to look at a few of the S&P stocks that are moving out here today. First is CRE, and it's off about 4.5%. Let me get this back up here a little bit. Pretty easy one to hit. Came in, tested the previous high out here on May 7th, $33.45, 3.7 million shares. Came in with that yesterday on 2.8 million shares, got up to 33.60. Pretty nice reversal out there. It's printing off around 32 right now. I suspect making its way back into that gap between 28 and 26 from the, what is that, the 17th of October. Shield, another one of the living dead stocks we've been talking about, like RIM. These stocks are going to bounce around a long time before they finally give it up. Not every stock is a Enron and just instantly augers into the dirt straight down 100 points. A lot of these take a long time to, it's kind of like the Titanic, you know, it's kind of bobs around, you know it's going to sink, maybe it breaks in half, a lot of people scream, then it kind of floats around for a little while, and then everybody's just kind of quiet. But normally, it is pretty tough for these things, at least big companies, to die. They can always sell a few things off. That's what happened at Sears Holding, but it's breaking back down through its lows. My guess is the next low it's going to hit out here is $41.15 from the January 31st low of 2012, and that's 1.5 million shares. You know, what did we get? $43.05 today. So another $1.80 down. It's probably going to find its lows back in there fairly quickly. If we go back a little bit farther, that low at $28.89 looks like a pretty good opportunity also to get tested as it goes through some of these previous lows. But Again, it's not going to happen overnight, but look for shares to continue weakening, especially after this retail session is over for this year. And as we get into Christmas, thing is going to get weaker and weaker. Seagate Technologies, STX. And I think we've had people call in about this that are short or had options on it. Not looking too bad out here. It is pulling back down to the high volume that it had last time. That high volume is going to be at the 24.85. What is that now? What's the low? 23.78, excuse me. High volume day, and that day had how much volume? I thought it was pretty high. And 20 million shares. So if you're going to keep an eye on it, that's probably where support's going to come in. That's going to be just a hair under 24 bucks. You're going to start seeing that next solution. Volumes, especially when you look at Dell and HP, continue to move lower as everybody is buying a tablet this year instead of a new computer. And it's getting incredibly difficult to be in that business. What else do we have out here? Intel, taking a look at it. It's down 47 cents. INTC, it's getting to the bottom of its support level. INTC, what do we have? Yeah, we did test it with higher volume compared to some of the previous lows. The September 6th low out here, what do we have? September 6th, $19.16 from 2011, September 6th, 79 million shares. You got into it just about a dime over it on November 21st with 95 million shares. Makes a very good case that 1916 is going to be retested. You need it to, of course, be below 95 million shares and be below 79 million shares at the same time. But pretty much nice polytrend top out here. But that $19 range probably going to be fairly significant support as they still a pretty decent company to have out here. BBBY, again, we were talking today about just how weak a lot of these companies have been in retail. And again, it's one of the NASDAQ 100's weakest stocks today. Looks like to me it's going to come back and test this gap around 55, 56 level. The last major low was November 16 at $55.58, 3.1 million shares. And probably going to have a little higher volume than we had yesterday, but it looks to me like this wants to at least come back and test that 58 low and the gap where it reversed on almost no volume just a few days later. What was that, on the 19th of November? So you've got a lot more weak stocks out here that don't really look like they've been able to catch a bid quite yet, other than a few short covering days. Anyway, we will be back right after this. Give me a call, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to look at a few more stocks that are moving in the marketplace right now. And let me get back to this NASDAQ 100 list I have here. Take a look at it. And we looked at the big dogs of the NASDAQ already. We'll start looking at a few other stocks. If you all remember, right before the election, I kind of said that the canary in the coal mine was all the stinky stocks were the strongest that day, and I kind of see the exact same thing that we see here today. MCP, Molycorp up 7%. And when these dogs that, basically a lot of short covering and short covering squeeze, a lot of these are engineered. We're seeing these bounce off the lows. But Molycorp still needs to probably come back and test that $5.75 level one more time. And we'll have to take a look at that. But it's, you're going to continue to be dogged by SEC investigations for a while, and until those are cleared up, probably not going to change a lot in the marketplace here today. RIM was another one. Now this one, super engineered short squeeze. And let's say, why would you want to squeeze a stock like Research in Motion, no matter how much it's going out of business? The idea is that there's still people in this thing. They'll still trade it. They'll still push it around as long as they're alive. It's like Sears Holdings. You know it's going out of business. It's going out of business in the next couple of years. Can you pick the exact date? No. but probably a lot of people short RIM $50, $40, $30. They can sit on it for a fairly long time. There's nothing coming out of this company that makes you think that there's a chance in hell that they're ever going to be able to pull this thing back together. We're seeing a lot of those kind of stocks come back today. What was the other one today that was actually bouncing on the thought that the CEO was going to be pulled out? I remember it was Groupon, GRPN, GRPN. And, when these stocks are, hugely short, it's not uncommon to see bounces of this magnitude. We saw them, probably the worst bear market, 2000, 2001, as the dot-com boom busted. These things are, a 50% retracement in a bear market is no big deal either. And Groupon had its last major low at 280 or 260, on November 12th. No big deal to see these things actually bounce back up. This one in the $4.50 range. A lot of people, that are weaker hands are probably going to may have shorted it in the $5 or $8 or $10 range. They may go ahead and take their money as this thing comes back at them. To look at today's news and yesterday's news, which was mostly a reaction to the CEO announcing that he knew that his job was probably in trouble. I haven't checked the news out there today, but I think they're voting tonight on whether or not they're going to actually keep him in that marketplace. But we're seeing a lot of these stocks that have sold off fairly strongly. Baidu, one of the strongest stocks over in the Asian continent, has been fairly weak. We continue to see, I think it's Singapore making multi-year lows once again in China out there over the evening. So it's nothing new. Now, probably the biggest thing is that you did break the last major low, which was $99.71 on July 17th, with heavier volume on November 13th and 14th, when you had 16 million shares. So Baidu, another broken stock. Can it come back up to 99.71? Yeah, there's no big deal out there. What do we got? It's kind of in that range right now. So you're getting into the part where it did blow out. This is a stock that has broken the lows on higher volume without, really seeing a lot other than it's kind of popping back up here. You can give me a call at 877-927-6648, 877-927-6648. Looks like everybody in the den's busy today. A lot of trades going on. It must be very quiet out there today. Other stocks I wanted to look at. See if I could find Amgen, Intap, Maxim, Expeditors, International. Let's look at some of the ones I have in my scans today. There are a few stocks out there that would look interesting if this market does turn the other way. One of the ones I've been watching is Xenoport. It is it's not C. It's XNPT. This is exactly what you're looking in the standard Wyckoff buy pattern. Breakout, huge volume, slow return back here, and then it goes sideways for a number of days. I keep on saying Z. It's XNPT. And you had a nice reversal down to these lows on lighter volume. Remember, every trade is about 50% the actual stock market as a whole in the broad market, either in the NASDAQ or the S&P, probably what the stock follows itself most likely. The sector it's in, and then the actual stock is probably about 25%. So when you look at a chart, it's telling just one part of the story in that. And like Xenoport, first thing you'd want to know is that what business is it in. It's a biopharmaceutical company developing commercial portfolio internally discovered product candidates for the potential treatment of neurological disorders. So a lot of ways to saying if something's wrong with your nerves, they've got a drug for it. Apparently still going through some of these Parkinson's disease and some others, MS. But been around since 1999, Santa Clara, California. But I'm not one to play pharmaceuticals at any point. And but you know, you have to actually say this chart is one of the better looking charts out here in the marketplace these days. Let's see what else we have out here. TTM Technologies. Another one that I like the look of the chart, although I don't like the market itself, but you know, if that changes, I will change my opinion also. TTM Technologies, TTMI is the symbol on it. Another one that's setting up on a very nice long-term support level. And what we have is a gap right about the 850 level. Let me see, that goes back 2 years. I have to go back even farther to take a look at this gap. This gap goes back to 2010. It looks like July of 2010 out here. And has been support over the years. Of course, you've got a really nice untested high out here at $19.64 on April 4th of 2011 that you could always go back and test. But this is the kind of thing that is not uncommon to see. That is a takeoff with volume. You get the energy that you want. It goes up to these highs. And it works its way over time, and in this case a few years back down to that support level. Normally this is where you want to start looking at it again. I'm going to do just a little closer one here. But what we have is a fairly nice low developing. The last major one is 855 on June 25th. Just under 1 million shares. We came in with about half that on November 16th and kind of bouncing around in that 8.5 to 890 range out here. Light volume today. A lot of these stocks that have bottomed out, I haven't seen anybody massing to get into these things, which is another clue for us to keep an eye out in the market. Some other ones that look like they should have broken out and haven't. Oshkosh Corporation, OSK. This one giving a fairly clear signal and a reversal today that it's pretty much done at its attempt to the top. The October 11th high was $31.30, 6.2 million shares. Could not get even 1 million shares over the last few days. Looks like we're going to get a little bit of dark cloud cover in the candles out here. You know, probably not a huge winner on the short side of a stock like this. Could it go back down to that 27.50 range and maybe even 26.75 on a bad market? Yeah, probably better stocks out here. What's confused it is a huge volume day up on the 11th of October that's moved this thing sideways for a number of days. But there are a lot of these stocks that I'm starting to see come in. One of the ones I'd love to short, but it is perennially short already, like a lot of other stocks that are having some problems, is New Oriental Education and Technology Group, EDU, another one of these pay-for-play educations. These education companies, this particular dubious enterprise operates in China, and probably a double whammy compared to Coco and Apollo and some of these others shams that are in the United States. But you know, we've got pretty much everything in this one that says we are at a point where if you could get shares, it would be nice. EDU is the symbol. You got smacked down on absolutely monstrous volume. Went down and hit a low on 48 million shares. That was on June 19th. So you see just that huge, massive move down, July 18th, excuse me, down to $9.41. Slowly moved its way back up, but you really haven't had a sign of strength other than this thing coming back in to fill its gap. Really looks like this thing's setting up with about a $10 trading range on a $20 stock. So you've got the opportunity for maybe 50, you know, maybe 100% move, 50% move, 50% move back in this thing up and down in some of these stocks. One of the other ones that caught my eye and I was looking at in the newsletter today and keeping an eye on is ASML Holdings. One of the few stocks that actually broke out, but again, we are not seeing the kind of volume that you would love to see in some of these stocks that are coming out. ASML Holdings is engages designing, manufacturing, marketing, and servicing semiconductor processing equipment used in fabrication of integrated circuits. I didn't check the news on this, but I probably should. Maybe I'll check it during the break here. But we certainly are seeing a lot of this kind of action. You get the breakout, you get no volume on this thing, and you're really thinking about looking at some of these as island reversals out there. But I would certainly keep this on your radar for tomorrow, ASML, and see how this thing changes tomorrow. We get a change in the marketplace. Might be a wonderful stock to keep an eye on. One of the other things, we're seeing Apple try to break out. I'm going to get into taking a look at that. I think we've got a caller as soon as we can get somebody to actually type. But we've got about 2 minutes, so we're probably going to make it through the break. But I wanted to get into Apple just a little bit. Let's see, AAPL, because it's been pushing the resistance level that we've been talking about, which started at about 580. Got to 594. It's going to make a little doji out here. So what do we really need to be doing now? We need to be looking again at these stocks that feed the parts into the Apple supply chain. And those stocks that are probably going to give us the best signals are Avago, AVGO. They make radio parts for the iPhone and iPad, both, I believe. AVGO is a symbol on that. So let me get down to like a 6-month chart out here. This thing's coming in to previous highs that had 6.8 million shares, 2 million shares, 2 million shares, and it's got the same thing pushing about 1.2 million shares. So we're going to go to our phone call, and that is Mohammed in Glendale. How are you doing today, Mohammed?
How are you, David?
I'm getting better every day, and in every way.
All right. Sounds good. Now, with the stock, ACUR, is that a completely shot in the dark for this to get back maybe to about 5 or so? Or am I better off with trying my luck with the Powerball?
This thing is such light volume. I did some fairly extensive studies, and here would be my thoughts on that. Using any of my techniques on stocks that have less than about 300,000 shares traded daily are probably not worth a lot or anything. If you don't have many shares, you really don't have a market. It's kind of like having a rare car and maybe 2 or 3 people in the United States wanting to buy it. What is it worth? Pretty much anything, you know, if you can get somebody, whatever someone you can get to pay for it. You want to hang on through the break?
Sure.
Okay. We'll be back with Mohammed in just a minute. You can give me a call, too, at 877-927-6648. We're going to talk with Mohammed about how volume works, at least with the stuff I work with. But sometimes light data is almost no data. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We've been talking to Mohammed from Glendale, California, about Acura Pharmaceuticals. Basically, they make happy pills for people that are really sick and in pain. You know, if this chart's right, I wasn't able to really check whether 260 was the high for today. But this thing really looks like a some kind of mover out here. What were you thinking on this, Mohammed?
Well, I was looking at it to see at the beginning of the day. It was trying to, get to the 200-day and closing the gap, perhaps. But it seems to be failing badly. Forming a large tail.
I don't see anything in this. I did a lot of work on how many shares before you could actually get a stock that would do anything that was fairly predictable. And I've come to the answer over time that I still want to see about 300,000 shares trade before you can even start to see a stock seem to be liquid enough to give good predictable signals. And when you have a stock trade 80,000 shares or 150,000 shares or 60,000 shares or 40,000 shares, it's just the market's too thin, I think, to actually get any kind of decent signals. The other side of that is if you're on the wrong side of this stock, there's no getting in or out a long time. The exits are one door, and you've got a theater full of people trying to get in and trying to get out of this thing. And, I just don't understand maybe, why this company probably even exists. There's lots of good pain medication out there. They have some new opioid analgesic products, but there's only so many different ways you can make heroin. You know what I mean?
Yeah.
So the question is, you're making morphine and heroin derivatives to basically put pain away. Most of them are actually going to be abused. I think there's probably better companies out here in the pharmaceutical business that have a better plan. I'd much rather, you were talking about buying a lottery ticket, I'd much rather get into a company that was a buck stock where someone was trying to actually cure cancer or a specific drug or something. This one just doesn't, both in the business that they're in and the chart that they have, just doesn't show me a whole lot.
Got it.
Okay. And two, look for stocks. If you can get 500,000 shares, your odds of getting a predictable stock are just so much greater than 300,000 shares. When you get to 1 million, normally you get a fairly predictable stock in comparison to these things that trade 100, 150,000 shares.
All right.
Okay.
Thank you so much, David. Okay.
You bet. Wanted to go to a couple other stocks out here and see if we were seeing anything. The one that everybody's been talking about here for a while has been Skyworks Solutions. It's had a nice little move here today. Not any volume. It's back up to the heavy volume candle day of the 2nd of November, where it came down on over 17 million shares. We're doing about, going to probably do 5 million shares by the end of the day. This thing is up against very strong resistance levels, pretty much like the whole market. So I think, you've got a good chance here. If you want to be long, I could see that. I just don't think that there's near the money to be made on the short side. If this was even a coin flip of a market, you're not going to make that much money on the high side or on the long side, at least in my opinion, compared to the possibility of some bad news in this marketplace taking you down a lot further. Anyway, you all have a safe and happy day. And hang on for another 3 hours of wonderful programming on the TFNN radio and video network, your headquarters for technical trading and investing. And my newsletter, too. See you all tomorrow.